Welcome to This Week in Money. I'm Jim Goddard. Today, Chartworks CEO Ross Clark runs down the action on the major markets over the past week. Armstrong Economics founder Martin Armstrong tells us efforts by the BC government to corral housing prices could cause a recession. He believes most politicians have no idea what they're doing when they try to influence the economy, and that they usually ignore good advice. He also thinks the global economy peaked several decades ago. Plus, at the end of the show, we'll have a company showcase update from American Manganese CEO Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Chartworks CEO Ross Clark. Welcome back to the show, Ross.
Good to be with you, Jim.
Was it a good week for precious metals?
Well, it was a good week for precious metals and not much else when you take a look around. When we had the FOMC meeting on Tuesday and Wednesday, and the Fed came through with their quarter-point increase as expected, but you got an 8-0 vote on that, so clearly they are looking for not just this first move up, but multiple ones. And the whole concern over inflation is now being talked up. So with that, and with what we saw in the equity markets this week, by the time we got to Wednesday's close, we had a pretty important technical reversal here in gold. In the last couple of weeks, I guess about the last 4, we've had 2 good oversold weeks when we were down in the 1310 to 1315 range. And I was thinking we could maybe test support around 1280, best case scenario. But we've got these 2 good oversold points at the right point in the 8-year cycle to be looking for a bottom. And so when we got the outside reversal as of Wednesday, this thing is now starting to gain some momentum, up again on Thursday and on Friday. So we're just short now of 1350 on the gold price. And it looks as though it's going to have some legs here because, when we look at it from a sentiment perspective, John Paulson, who had been running a big gold fund, is just now wound it down. And when you see complacency in a sector where a fund like that ends up being closed down, it's just indicative that things are ready to come back to life. It's a great, great contrary opinion item. The other thing that we're seeing is the commitment of traders numbers, where we see what the speculators and commercials are doing. The speculative positions dropped by 19,000 this week. That was a pretty good drop. But in silver, they actually went negative. We now have a net short position of over 12,000 contracts in silver. We haven't seen it down into negative numbers that often, probably 5 or 6 times since 2000. The last time was in 2013. And when we've seen this in the past, levels like this, we've seen upside action that has taken us along for at least another 4 to 6 weeks. So metals at this point on the precious metal aspect are looking pretty darn good.
Could the scandal at Facebook drag down all tech stocks?
I'm inclined to think that the market that's been as strong as this for as long as it was can be susceptible to some pretty big corrections. And, we'll see how this unfolds right now. we have a pattern, a sequential pattern that we look at, which as of the February drop in the markets, had 9 consecutive days of downside action with some rules on it. Typically, you will get a good bounce after that, which we did, and we start a new countdown from there. We're looking for 13 bars in which the close is below 2 bars earlier. And the graphic that we set out to our subscribers early in the week showed that we were at that point in development where we could be ready for a good hard break down as we approach the full 13 count. And it looks as though probably next week we'll get into that measurement. So from a time perspective and from a pattern perspective, you could be looking for an interim, either a really good low in the next week or so. Ideally, it would go down and take out that February 9th one, maybe, and try and reverse from there. If the reversal doesn't hold, it could be like 2011, which was the last time we saw this pattern. In September of 2011, the market made a sequential buy signal, and we got just a phenomenal rally. Actually, we've never been back to that level since. But it was preceded by a false signal. The false signal was in July. The market couldn't make its upside reversal. We call this a flip. And it just ate away at itself on the downside, gave up about 14% in a week and a half before it then started into a new base. So where we sit right now is, I would think, next week we have a possibility of a reversal, but if it doesn't gain some traction here, then make sure that people have got some pretty tight stops once we get the first interim low in place.
Copper dipped below $3 a pound at one point on Friday. What's going on there with what they call Dr. Copper?
Well, Dr. Copper, typically, the markets historically have followed copper. Not so much in the last 5 years or so. There's been some independence there. However, when you do see weakness, when it starts to roll over, it has had an effect. It's been one of those barometers of the strength of the economy. And there's been a bit of what you would call a distribution pattern here from September through the middle of February. Progressively 3 higher highs and 3 higher lows, but at a much diminished pace than we had been seeing in the summer. We broke the significant support line on that one at 305 in the middle of this last week. And the piece that we put out, we showed how in the 4 previous instances like this, where you had had big recovery rallies off a low, and in this case it's a 2-year rally off the bottom. If you paused here and broke those supports, you would break down by the height of the pattern. So the measured target here, we're sitting at $2.98. We're looking at a 272 target, which I think is pretty, it's going to happen reasonably quickly.
Ross, thank you so much for chatting with us.
More than happy to be with you, Jim.
My guest has been Ross Clark. He's the CEO of ChartWorks. His website, chartworks.ca. Coming up, Martin Armstrong next on This Week in Money.
Always consult your investment professional before making any investment decision.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Martin Armstrong, founder of ArmstrongEconomics.com. He's speaking to us from Florida. Martin, welcome back to This Week in Money.
Well, thank you for inviting me.
People are taking a look at the Dow Jones Index and are wondering, will it break the 40,000 mark or will it plunge like a wounded duck?
Well, I think, I know you end up with a lot of people that keep, that all they've been doing is preaching at the end of the world and stuff like that. I mean, this has been the most hated bull market, I think, in history. But just ask yourself this. I mean, when, you've had crashes before, they tend to be because the private sector is the one that's in trouble. This time it's the opposite. It's government. Look, they just slipped into the bill very quietly. Nobody even, I'm not even sure there's been any news stories on it. But, they just slipped into the budget a proposal to allow, the government to bail out 200 pension funds. This whole process of a quantitative easing, people don't, realize. They kept saying, oh, it's going to be hyperinflation. I said, yeah, good luck. To get something like that requires a collapse in the confidence in government itself. And we're not at that stage. I mean, that is what you see like in Venezuela, stuff like that. When it's fine, they increased the money supply, but, people have to spend it to get inflation. And that's not been the case. Even in Europe, people have been buying safes at record levels and they take cash out and they're hoarding the cash. So the low interest rates have basically created the next crisis. And I've been writing about this for the last, few years. I said, this is what's going to happen. Most pension funds are insolvent. I mean, the ones that have done well are far and few between, and they are the ones that have abandoned government bonds. We had one client, I can't mention the name, but one of the top 10, and they finally listened to us, and they sold all their government bonds. And when S&P went in and they said, gee, you're taking on more risk, and they pulled out, and they said, look, fine, not only this is what Armstrong's been saying, but we did our own due diligence, and he's right. Who defaults? And when you lose everything, it's government, not private sector. I mean, IBM or something like that, you buy corporate debt, even if the company goes bust, you end up with a bankruptcy sale and you get some money back. Government, you get zero back. You can't go down to the, National Gallery and start lifting Picassos, It's just, that's the way it is. So the crisis we have is this pension crisis, and it's monumental. CalPERS, which is the biggest in the country, they can't cover, basically the payments that they're going to owe. So California's looking at raising taxes to bail out, CalPERS. And CalPERS has been lobbying in Washington to seize everybody's 401ks, and give it to them in California to manage. And therefore, then they'll be okay, because then they'll take private money to pay off the government pensions that they owe. I mean, just look at it this way. It's very simple. If you got 10-year bonds, and let's say they're paying 3%, you need 8% to pay out pension funds going forward. They can't afford to buy 10-year bonds. They do. They lock in a guaranteed loss. This is what Janet Yellen kept talking about, and people were not understanding what she was really saying. But we have to normalize interest rates. And this is what she was talking about. But they don't go out there to the press and say, gee, if we don't do this, all the pension funds are going to go belly up in about 5 years. They don't do that. They just, very quietly, we got to normalize. What's normalized? They got to get back up to where pension funds could be solvent. So, I mean, that's the real crisis we have. So, if you have basically pension funds going down, you have government bonds which are going to go nowhere but down as interest rates go up. Where are you going to put your money? And, don't tell me gold. That's for an individual. Big institutions can't buy gold. All right? They can buy gold stocks or something like that. They can't go buying, $20 gold pieces and bars and store it someplace. They can't. So, that's why the stock market's been going up since 2009, and that's why I say it's the most hated bull market in history. I mean, these people have been calling for a crash every time it makes a new high. I mean, fine, we put out a, warning in January. Yes, okay, fine, this is the time we're going to get a pause now for the first time after 8 years, and we're going to consolidate for the first half of the year. So, the risk of this thing going down to, 50% collapse or 40,000 on the upside, I'll bet on the 40,000 any day of the week.
When do you see that happening?
It's going to really start taking off again more or less in the second half of the year. And then we're looking at this going into probably around 2020 to 2021. Our models on interest rates are just, it's mind-boggling. I mean, when you start going, when you're at these kind of levels, and you look at Europe, and you're at say 0 interest rates, a move to 1% is a 100% move, and if you're 1% and you go to 2, it's a 100% move. The percentage movements are much greater at these low levels than they are at any other point in time. So we're looking at interest rates, doubling and tripling very, very rapidly.
What's that going to do to the mortgage market?
Well, real estate, we've been warning, on the low end where people need mortgages. Real estate's not going to do, real well. It's not so much the level of interest rate. As interest rates begin to rise, people initially will run out and do refinancing. They'll buy houses. Because the average person out there isn't stupid. It's the analysts that are stupid. And, as long as the average person kept seeing interest rates going down, 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 there's no reason to go rush out and buy anything. As soon as you got the first uptick, what happened? They started going out and refinancing. They have to see a change in trend. And that's what central banks fail to get. It's like, you can keep lowering it and lowering it and lowering it. Well, why is somebody going to go out and get anything? Because it might be cheaper next month. It's the rising interest rates that cause people to rush out and then finally now lock stuff in. But the biggest problem with real estate is that the interbank market is collapsing rapidly because banks don't want to trust other banks. And, then the real estate market is entirely really dependent upon mortgages. And if banks are not willing to write mortgages, that's when property prices basically decline. And, that's our problem at this stage in the game. It's the higher end properties that have been selling, in the several $1 million categories, you look at them, most of them have been selling for cash. That's people just trying to get money out, off the grid. They don't understand the Chinese real estate market. They keep saying, oh, that's a bubble, it's got to crash, whatever. They're looking at it in American terms. In China, what's the problem? The problem is, one, they cannot take money out of the country, and two, they don't want to keep money in the banks. So what have they been doing with? They've been buying property, even these condos, and nobody's living in them. They don't care. It's getting money off the grid. You saw the same thing in London. A lot of flats were being sold. Nobody was living in them. That's just capital trying to get off the grid.
British Columbia is proposing a speculation tax of 20%, or I should say it's a 20% tax on foreign buyers for most of the popular places in the province, and a 1% speculation tax if you leave your property vacant. Do you think that would affect real estate prices and make homes more affordable?
You know, when they say, oh, we're going to make homes more affordable, what are they actually saying? We're going to cause, property values to crash. So it's like saying, well, the Dow is too high at these levels at 20,000. We think people could afford to buy more if it was 5,000. So that would be better. I mean, what these politicians don't get, because they really are honestly brain dead. You have the same thing going on in Australia. They actually made it a criminal law for a foreigner to buy property and not reveal that he's a foreigner. New Zealand, the same thing. They want to punish any foreigner that's coming in buying. Once you do that, what happens? All property values decline. All right. So now, all the studies show that people will spend money much more easier when they think the value of their home is rising, because they see that as a bank account. When property values decline, even if their salary didn't change, they spend less. And that's simply the way it is. If they feel rich, they spend it. If they don't feel rich, they hoard it. So these crazy laws in British Columbia, yeah, fine, they're after all the foreigners, let's stop this stuff. Very nice, but property values are going to decline. And as they decline, people will spend less, and you actually create the recession.
Do you think the governments would take the responsibility for causing that recession because of their real estate moves?
Never. Politicians will never accept responsibility for anything they do. Anytime they have a investigation of the stock market crash or something like that, do they ever look at themselves? Never. I mean, I was called in back in '85, and I was one of the 35 people that, when they were forming the G5. At first I thought, oh wow, I guess I really made it. Then you realize what the system is. They go, oh gee, Mr. Armstrong, how do we save the world? Oh, very sorry, your 15 minutes is up next. And then they stand up and they give their conclusions, pretending they've listened to all these experts, and they do whatever they want to do anyhow. And then I wrote a letter to President Reagan. I said, you do this. And they were proposing to force the dollar down by 40%. I said, do you realize you're going to create volatility? I got a letter from the White House. You can look it on our site. Gee, we disagree with you. Pretty much you're the only one with a volatility model. Then the 87 crash comes. All right. Next thing you know, they're trying to drag me in again. Oh, volatility is our number one problem. You can look at the conclusion to the Brady Commission. And I had to fight like hell just to get that done. All right. At the end, they basically say, well, we think it had something to do with foreign exchange, but we're not really sure. They were that's the best I could get them to blame themselves. So they didn't put in they put in some circuit breakers. They didn't do anything on the 87 crash because it wasn't private. It was basically the public sector. That's just the way it is. They never blame themselves. They always look at somebody else.
We'll have more with Martin Armstrong next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799. I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Martin Armstrong, founder of ArmstrongEconomics.com. He's speaking to us from Florida. Martin, Larry Kudlow was appointed director of the National Economic Council by President Trump. Was that a good move by the president?
Look, most of these people that take those kind of jobs don't really, I don't know. They never bring in the people that actually have real experience. It's just the way it is. And those, in all honesty, those that do have experience really aren't interested. It's just the way it is. I mean, it is strange, but, the politics is just too dirty. They asked me if I would be interested in the job. I said, what are you, absolutely crazy? I said, first of all, I've advised, we're international. We got offices, around the world. I said, they're going to say, oh, you advised Toyota against General Motors. And so you basically caused Americans to lose jobs. I mean, that's a traitor. I mean, how can you deal with this? It's like nobody that's ever done anything for real can possibly go in there.
Does the Trump administration prefer a weak U.S. dollar policy?
Oh, absolutely. The U.S. is opposite of Europe. It's just a cultural difference. And it's largely emanates from World War II because, after World War II, all the currencies that pre-existed went off the board. So the politicians that began to, running after World War II said, see, the Deutschmark, it's up now 25 cents from 22 cents against the dollar. See, that proves I'm doing a good job. So the higher the currency went, the politicians used it as validity for them why they should be elected. In the United States, I mean, that's absurd. How can somebody run for election and say, oh, well, the dollar's up against the Canadian and the Mexican peso, and everybody's going to look and say, yeah, so what? So U.S., it's always been the opposite. They want a lower dollar. G5 was to lower the dollar in 1985. I mean, every time they want to lower the dollar because they don't even understand their own trade numbers. And it's remarkable, but honestly, they're just a bunch of complete idiots. And I've warned them so many times. And you see them make the same mistake over and over and over again. All right, they talk about, balance of payments. Okay, fine. I'm doing a piece, actually, it'll be published, I think, tomorrow. Most people say, the dollar should decline when the balance of payments gets worse. The dollar actually went up because they don't even understand the numbers. If China buys U.S. government bonds, the biggest holder. Okay, so that goes into the capital account, not the current account, capital account. However, any interest that they earn goes back to the current account, which everybody calls trade, and it's not. All right, so what happens is that has everything in it. So suddenly they stand up and go, oh my God, we have a trade problem with China. The trade deficit with China. All right, you're also including interest. You're not even looking at that. With the Japanese, I told them how to reduce it, the problem politically. I said, what you do, I had them buying gold in New York, exporting it, taking it to London, and reselling it, all right? It doesn't matter what you buy. As long as they bought the gold in New York and they shipped it to London, hey, they bought U.S. goods and they exported it and reduced the trade deficit. It's just a joke. The whole thing is a joke.
Canada has a globalist prime minister and excessive debt on many levels. Is this a recipe for disaster?
Oh, absolutely. I mean, look, all these governments, the problem with them is they somehow think that they're the exception to everything. When I've been in meetings with them, I mean, it's absurd. You know, why are we borrowing money? And every government does this. They borrow money year after year after year with absolutely no intention of paying anything back. Then you look at the national debts, and U.S., Germany, Canada, it varies at different points, but up to 70% of the entire national debt has been cumulative interest payments. I mean, you're not even creating these, socialism, we want to take the money from the rich and help the poor and create schools and roads. Sorry, but the bulk of it's going out to interest to keep the debt rolling. Just take a look at the numbers. It's just really astronomical. And once these interest rates start to rise, kitty bar the door. I mean, over the next 4 to 5 years, people are going to see what I'm talking about. This thing is just going to absolutely explode. Then the governments still won't understand it. What they'll do is then they want to raise taxes to try and reduce the deficit, and then they reduce the economy even more, so then they collect even less taxes. It's a vicious cycle because we elect people that have absolutely no idea what the economy is about or how to manage it. They stand up, they wear nice socks, they smile or whatever. Oh, yeah, she's nice. I mean, in the United States, what were they saying? Oh, well, maybe Oprah Winfrey should be president. Why? Because she's a woman in black? That's it?
Well, everybody gets a brand new car.
Yeah, I mean, it's just a joke. I mean, there's no qualification. Would you walk up to somebody and say, oh, well, you look nice. Would you mind, I need heart surgery. Would you do it for me? I mean, that's basically what they're doing. There's no qualification whatsoever to be the head of a country. And then they make these decisions that basically affect everybody's life. But he wears nice socks and he smiles nice and he waves. It's a joke. The whole thing's just a joke.
Could Canada be in for debt deflation ahead, and what does debt deflation look like?
Basically, this is what you're seeing in Europe. I mean, you have quantitative easing. The government debt now is owned 40% by the ECB, by the central bank. All right, so everybody kept saying, oh, this is going to be hyperinflation. All right. It has turned into deflation. Why? Because at the same time, they keep raising taxes and enforcement. They're chasing everybody. I mean, when I basically fly, I had to I was in Brussels meeting with people in Parliament. Then I took the train over through the tunnel to London. So I was probably the only one really in a suit and tie. I was running over there for another meeting, and then I was going to check into a hotel. I'm the one pulled over. And the guy's looking at me and, how much money do you have on you? I said, first of all, I'm an American. That wasn't good enough. He wanted to see my ticket, where I bought it from. I said, I bought it in Brussels. Okay, I'm coming over here for a meeting and I'm leaving. I'm not an expat living here. Oh, okay, fine. And I come back into the United States. It was like the questions, they're no longer interested in trinkets and, how many t-shirts did you buy? We get our tax. How much money you got on you? That's what it's all about now. I mean, it's become, and you go to Italy, and if it looks like you have too much gold jewelry on, they take it off and they weigh it. I mean, they're hunting money everywhere, because they're broke. And the more this continues over the next 4 to 5 years, your liberties are going to continue to be declining. That's it. They're going to take more and more and more away from us because they're broke. And the system is just insane. I mean, they should, the Roman Empire had no debt. They increased the money supply each year to cover whatever it was that they needed. All right? It lasted for 1,000 years. All right, it didn't get into a major debt crisis. It was the crisis that took place in the third, century was after a Roman emperor was actually captured by the Persians. But we live on debt, and we have no intention of paying it back. So as interest rates go up, the interest expenditures crowd out everything else. And then they will only blame the rich, and then they will hunt more and more money down. And as they do, the rich pull back. They don't invest. People hoard money, and then you get to recession.
We'll have more with Martin Armstrong coming up next on This Week in Money.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Martin Armstrong, founder of Armstrong Economics. He's speaking to us from Florida. Martin, could a strong resource sector keep Canada prosperous?
Not really. I mean, you have a very strong separatist movement rising there in Alberta, and even some trade wars going back and forth between BC and Alberta, where they don't want the pipeline coming through and stuff like this. But resources by themselves, no. Oil is not going to go off into the sunset. We're going to be still using oil for many decades to come. You can't possibly create electric cars to displace, combustion engines. The power grid to charge all of that would be astronomical. But we can certainly supplement energy, with solar panels and things of this nature very nicely. But, as far as, resources are going, don't expect China to be the huge buyer of commodities that it was. Oil will still hang in there, so Alberta will be okay. But as far as reversing the whole trend of the economy for Canada, no. The amount of debt owed and the increase in taxes that you will see over the next few years, that overwhelms any possible, recovery just simply based upon resource.
The federal government in Canada insists on imposing new carbon taxes on the provinces. Is that an economy killer?
Well, sure. First of all, the global warming thing is all propaganda. There's over 35,000 scientists have signed a petition against all this stuff. There's no historical evidence of anything. They've been, manipulating the data to show that, the world is getting warmer. No, we're the greatest danger we face is we're heading into global cooling. That's look, we've been getting colder and colder winters, and what the danger of that is that crops don't grow with cold weather, and you basically disrupt the distribution of food. Things of this nature are much more serious and disease increases with cold weather. That's why the flu season's always in the wintertime. But that's this idea of carbon taxes. It's just another excuse to raise money for taxes. I mean, it's absurd, really.
Jerome Powell, the new chair of the Federal Reserve, raised interest rates 1/4 point this past week. Looking at history, are interest rates likely to spike higher at some point?
Oh yes, we're basically in a trend moving higher. That's just the direction that we're going. I can tell you the source of the real crisis is more in Europe than it is anywhere else. And the Great Depression actually started when the first bank began to fail in Austria, and then it turned into a contagion over there, and then it spread this way. Europe is the biggest problem. It is a huge economic disaster. And I mean, all right, Canadians understand. I mean, if you borrowed money for your house and it was in U.S. dollars, and the dollar goes up 30% against Canadian, you suddenly owe a lot more money. All right, that's what they did to Southern Europe. They didn't consolidate the debts. They let every country with its own debt, but they forced them to convert it to euro. So then you have Greece, Portugal, Spain, Italy. Why are they all in trouble? Because basically they converted their debts to the euro. Then the euro went from 80 cents, to $1.60. They owe twice as much. This is what I mean about politicians. They just don't understand. And, there's just no qualification here. I mean, anybody that worked on a foreign exchange desk understands you don't do this. But, what can you do? I mean, as long as we're going to continue to elect people that have no idea what they're doing, they have no qualifications for it, I mean, this is what we're going to get.
Do you think there should be mandatory training for politicians?
I think if you look at the original design of the United States, it was probably the perfect thing that you could have created. The politicians were not career politicians. Their mistake was they didn't limit it. Okay? But Congress only met for a few weeks during the summer, and that was it. All right? There was no salary. They didn't think about this. All right? So when these people got in and they started liking the job, then they started paying themselves salaries. All right? That took a couple decades. I mean, it's been a constant erosion. The judicial system is an absolute corrupt, network. It's terrible. Ben Franklin suggested, and it was rejected, but he suggested the Scottish system, where the lawyers nominate judges, not politicians. And, if you had these congressional terms for 2 years, so you went down basically and you worked in Congress for a few weeks, one summer and then next summer, and then you left. There was no salary. That's why there were just 2 years. And now what has happened is they're full-time jobs. They spend maybe 6 months of actual work out of a 2-year term. The rest of the time they're out trying to raise money for the next election. So I don't know if training is the issue. I think really it should be just qualifications period and end career politicians. It has to end. I mean, I was at a dinner a long time ago. I knew Arlen Specter, and he was like, these people were talking about like Saddam Hussein and Gaddafi. Oh, they're dictators. They're there for like 35 years. And I said, well, how long have you been in the Senate? About the same time. They lose track and touch with society. They're above it. They're no longer, one of the people.
Well, not that they have elections in China, but is it a mistake for that country to allow President Xi to be basically dictator for life?
Probably, to answer the question, in all honesty, probably not. the system that they have, I mean, dictators, often throughout history, the best form of government is a benevolent dictatorship. Somebody that really cares about the people and the country, etc. But so it really depends upon personal character, but than anything else. But this idea of democracy and voting for it's nice, but there's got to be something else here. I say they're always out here searching for more and more money. And I mean, just look at Hillary. I mean, she stands up. She even publicly, it came out. She said, "Oh, you have to say one thing publicly, but what you do privately is different." All these people were like, "Oh, Hillary, against Trump." Who did the bankers donate money to? Only Hillary, not Trump. Why? Because exactly that. Whatever they want, she does. And as soon as you have somebody running for election and they need money, all right, they're for sale. Simple as that. Elections, if you're going to keep a democracy, elections should not be, they should be publicly funded, not privately. Period.
And donation limits?
Each person should get the same thing and it should come from the taxpayer money. There should be nobody allowed to donate money to any of them. Because as soon as that happens, then they owe them something. As simple as that. I mean, why do you think so many people were against Trump? Because they couldn't be bought. Simple as that. I mean, I have friends on Capitol Hill, and after the 07 crash, they said, "Oh, all these people come in, your deficit's this, you should be cutting that, but don't cut mine." And every one of them said the same thing.
Has the global economy peaked?
Oh, yes, it peaked back, actually. Growth-wise, you're talking about, we peaked effectively really in the early 1980s to late 1970s. I put a chart on on the site. You can look, world GDP. It has been in a decline ever since. I mean, now we think, 3% world growth is fantastic. It used to be 6, 7, 8%. It's just in a constant decline. And it's largely because government just keeps expanding and expanding. It's, about 40% of the GDP on a global scale is consumed by government. 40%. I mean, the Bible talked about giving a tenth. I mean, it never said give half of everything you owe to Caesar.
With a nationalist president in charge, will the U.S. be able to avoid a global economic decline?
The U.S. Will be the last to decline, but you have to understand that where can you put money? All right, the U.S. is not a party to the reporting standards that they put in. So if you go open an account in Dubai, for example, they have to report back to your home country that you open an account. This is what's going on globally. So the U.S. isn't part of that, and there's been a number of articles, you can probably Google it, that the U.S. has become the new tax haven, because they can, foreigners can come in, they can set up a corporation in some states, they don't even have to say who they are, they're anonymous, and they park their money here in the States. That's what's been going on. It's part of the reason why the Dow has done very well. And when the Dow rises first, that's foreign money. Domestic money tends to go institutionally into more of the S&P, and the NASDAQ is more of the retail market. But if you look at foreigners, they buy the Dow. Same thing in real estate. When the Japanese came over, what did they buy? They bought Rockefeller Center, etc. They buy the trophy pieces. They don't go buying, $100,000 houses on some back street somewhere. They're not into that market. So, I mean, this is really what you're looking at. So the U.S., I mean, its economic growth is half of what it was before 2007. And it's going to continue to decline, but the U.S. will be the last one to fall.
Is global real estate in trouble?
Yes. I mean, you have all this, anti-foreigner attitude. Look, the same thing happened in Britain. They went after the foreigners. They put a tax on it. British property has collapsed by probably a third in London. You're seeing the same thing in just about everywhere. In the United States, they didn't do it as drastically as many of the other countries. What they did do is that any houses being sold in New York or Miami, those two areas, were required that they pierced all the corporate veils to show who was really behind it. But they didn't outlaw foreigners from buying it. Property values in Miami are like, twice the price that they are anywhere else in the state. And it was mainly all the foreigners buying there, mostly South American.
It was drug money, wasn't it?
Probably a lot of it, yes. And then others is just basically rich people trying to get out of wherever they're at. That's what you see. I mean, even in London, what do you see? It's a lot of it's the Arabs that have bought a lot of property in London. I mean, I used to live there, and there's some sections around that there's just nobody around. The places are all empty.
Is the globalist dream of a one-world government falling apart?
Yeah, I mean, that's kind of absurd, really. Look, that's been the dream, just to try to federalize Europe and look at all the problems there. I mean, to have an idea of a one world government, I mean, that's, I don't think so. I don't see how it's even remotely possible. But, I mean, you're always going to have, in every country, you have left versus right. So, and then, the problems of Europe show the real inherent problems of growing into a federalized state. Even when the Federal Reserve was first formed, it was, properly done. It didn't last long, but it came, after the panic in 1907. And that was effectively, the issue was there was the San Francisco earthquake in 06, and that sent capital flows from the East Coast to the West Coast. So then you created a capital shortage, and then you ended up with a panic in 07. And so they realized it was regional flows that was the problem. And Canada it's the same thing. It's East versus West. That's why Alberta is talking about, trying to separate. And so the Federal Reserve was set up with 12 branches, and each one was independent. So you could have interest rates at 8% in California when they needed to attract money, and 4% in New York City. Then money would go over there to get the higher interest rate. And it balanced out the economy to prevent a crash like 07. Then what happened was, when World War II came in and FDR comes in, he usurped all the power of the Federal Reserve so he could issue debt to cover for World War II, but then they never put it back. So now we have 12 branches. Why? I don't know, because they're not independent, and there's just 12 branches there. That's it.
Are a number of countries likely to experience a monetary crisis in the near future?
Yes. I mean, I can tell you I've been in meetings, and the U.S., as we mentioned earlier, wants a lower dollar. They don't want a higher dollar, but unfortunately they're going to get a higher dollar because it's not a lower one. But, the problem that has emerged is that, and the Fed is raising interest rates while everybody else has been trying to decline. And in reality, the United States has lost the ability to manage its own economy because of international concerns. So the Fed wanted to start raising rates back in 2014. The IMF, ECB, everybody said, oh, please don't do that, you'll hurt us. So the Fed had to hold back. Finally, they started raising interest rates at the end of 2015, and everybody still complained. So you lose the power to manage your domestic economy because of international concerns. So there is definitely a realization that the Federal Reserve, one, has become the central bank of the world, and it has to worry about everybody else. And two, that there have been discussions about how do you stop the dollar from being the reserve currency. And I've explained to them, you can't pass a law. That's it. All right. You have to, there has to be some competition. Now, coming out of the Plaza Accord in 1985, that's where the idea of the euro was floated. The United States told Europe, federalize, you have to create a single currency. This is why the dollar is so high, because there's no competition. And so that was the birth of the euro, the whole idea of creating a single currency to compete with the dollar. But they never created a national debt. They left everybody with their own debt, so there was no place to park. China is not ready for prime time yet. Neither is Russia. You just don't, there's no competition. So the U.S. definitely does not like the fact that the dollar is the reserve currency, because they're losing control over the domestic economy because of all this international lobbying against them. So I would say we're probably going to be looking at a monetary reform, a new currency, like a Bretton Woods again. Probably you're looking around 2021.
If you were President Trump's financial advisor, what would you tell him?
I would tell him basically at this stage in the game that you have to do a credit swap. You have to. I would issue coupons to replace the national debt, and the coupons would be good for exchangeable for private shares. And I would eliminate the national debt at that point. Any future going forward, I would limit the expenditure of the government to 1% of GDP, and you just create new debt for within that percentage, probably around 6 to 8% max, and that's it. Period. Stop the insane borrowing, which you have no intention of paying back anyhow.
If the formation of the Federal Reserve back in 1913 was deemed illegal, what would happen to the U.S. debt held by foreign countries and pension funds?
Well, that would never happen. And these people put out such propaganda against the Fed. The Fed balance sheet is very minimal in comparison. I mean, it's got nothing to do with, the Fed doesn't create the debt. That's the Treasury. The Fed has already announced that whatever it bought, it's not going to renew. It's going to allow everything to basically just mature and expire. That's it. Now, the ECB, I mean, I find it remarkable how these people constantly bash the Federal Reserve. They never talk about the ECB. The ECB owns 40% of the entire national debt. The Fed doesn't even get, past 10. And then you're talking about, the ECB has stood up and said, no, we realize if we did that, the states wouldn't be able to fund themselves. So all the quantitative easing that it did do, it has publicly announced that it will renew. So as that old debt expires, it's going to reinvest. I mean, it's just mind-boggling to me. Everybody constantly bashes about the Fed. They don't even look at the ECB.
What would President Trump need to do to successfully end the Federal Reserve and transfer monetary control back to the government?
It's really irrelevant. People don't understand what they're even talking about when they say that. They think just simply because the Fed can increase the money supply. I mean, big deal. I mean, quantitative easing of $4 trillion was ridiculous. The bulk of the money is created by Congress. You want Congress to be in charge of all this stuff? I mean, good luck. They blame the Fed for everything, but it's spending, it's the debt, the national debt, okay? People just don't even understand what money is. And they're using such old, antiquated ideas. I mean, before 1971, if you bought government bonds, all right, you had, savings bonds, and you went down to the bank and you tried to borrow against them, you couldn't. It was illegal. All right? If you wanted to use the money, you had to cash them in. After 1971, government debt became collateral. All right? If you trade commodities, what do? You put your money in T-bills and you post it with the broker. All right? So therefore, there is no difference between national debt and the Fed printing money. It's absurd. In fact, it's worse because they basically are issuing money that pays interest. The Fed doesn't do that. So, I mean, it's this whole idea that the Fed creates money. It's absurd. It's such a tiny fraction. And just look at the national debt. The Fed doesn't have a $20 trillion balance sheet. You eliminate the Fed and you put it all in the House of Congress, good luck. That's what Andrew Jackson did, and what do we end up with? A complete sovereign debt default in the 1840s. That was one of the worst ever in history.
Is President Trump trying to replace income taxes with tariffs like the good old days?
Now, look, his ideas of trade and tariffs and things, it's very antiquated. And, you know, again, they don't understand this whole issue. It should be, if you're going to put tariffs on, etc., index it to currency. When they created Bretton Woods, money was fixed. So it was very simple. They just measured the amount of money going back and forth. And that theoretically meant if you spent twice as much money went out, you got twice as much goods back. That's the definition they use. All right. Then you went to a floating exchange rate system. All right. So if the dollar went down by 40%, guess what? 40% more dollars went out. All right. You didn't get 40% more goods. You know, there's nobody at the docks counting the number of Toyotas coming in or BMWs. It's the accounting system was created for a fixed exchange rate system, and they've never adjusted it. So they don't even know who has a trade deficit or a surplus, because then you put into that interest expenditures. So it's any money going out from the United States to China for anything, all right, goes out into the current account.
Martin,
unless they have bonds and they sell the bonds. That's it. Other than that, that's it.
Martin, how can people find out more about Armstrong Economics?
Basically just go to Armstrong Economics on our .com. We have tons of research on there, and, you know, you can look through the menus or all kinds of research, and you can search it, for pretty much any topic. You want charts on the debts and stuff like that. I mean, it's pretty much all there.
Martin, thank you so much for being on This Week in Money.
Well, thank you for inviting me.
My guest has been Martin Armstrong, founder of ArmstrongEconomics.com. He was speaking to us from Florida. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark and Martin Armstrong, and thank you for listening. Plus, a reminder, we'll have a company showcase update with American Manganese President Larry Reaugh right after the show. If you have any questions for us or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. We're speaking with Larry Reaugh. He's the CEO and president of American Manganese. Welcome back to the show, Larry.
Well, glad to be back, Jim.
American Manganese is on its way to Vegas. What are you going to be doing there besides checking out the roulette wheels?
Well, that definitely. But we will be presenting down there. We've been asked to present at the Argus Specialty Metals Conference in Las Vegas, or it's actually at Henderson. And so we'll be down there. We have a booth. I've noticed that the attendees have to pay a stiff fee to get in. So I imagine it's pretty, that'll be some pretty sophisticated investors that'll be there.
and I'm looking forward to it.
What's the message you're going to be taking to them?
Oh, of course, the recycling message, where we at? And speaking of that, there was another mention of us in Bloomberg today, and along with another recycling company. And what I would like to point out from that is that, the recycling companies that are starting to emerge, that are looking at solutions to come forward with on a recycling plan, are getting to be, it's getting to be, well, not crowded, but it's certainly getting to be a lot more involvement. And that's not a bad thing. I've been involved in big projects for the last 15 years, and the first one was molybdenum when nobody could pronounce it, and it was the first one for a year, one of 5 in the second year, and then one of 100 in the third year, and as it got more and more companies involved, the more they talked up molybdenum, and we were part of a group, and we were recognized, throughout the industry, and the stock went from a couple $1 million market cap to $300 million. Same thing with the manganese, except we didn't get a crowded floor on that one. There was only a couple of companies talking about manganese along with us, but the stock did move from a couple of million again up to about 60 million in market cap before the commodity crash in 2008. Now we're working on a recycling program, and we've been a fairly lonely voice out there for the since 2015 to getting into late last year. And, again, we started out with less than a $2 million market cap. We hit a peak of 50 million, and we've been bouncing between 35 and 40 million here in the last couple of weeks. So, the message is getting out there. More companies on the floor talking about it will bring more attention to us. And, just on that note, I'd like to say that we're moving ahead with to develop the pilot plant, the IPs, and then the pilot plant, and that everything that we're seeing so far is very positive. So I can't, I don't have exact results to give out yet, but I will have in a couple of weeks. So everything is looking good. Everything but the market, for that matter. And the market is looking very iffy. You don't know whether it's going to correct 20-30% or whether it's going to bounce along, in this range, 2,300 to 2024, or say 22.5 to 24, and then turn around. But it's not the end of the market. It's not going to be a long-term bear. And I think that under Trump's guidance, that the economy is picking up in the U.S., and you will start to see a better market developing as we go further into the year. I got a couple other things that I get asked about all the time, and one is, why Cametco? Why Cametco? Why are they involved? Well, to be very honest with you, it's not a tough decision for the management of this company. Cametco developed a process for our manganese project in Arizona, very successfully, I might add. Now, that had been worked on for over 80 years by scientists in the U.S. Bureau of Mines, by independent labs throughout the U.S., and they could never accomplish what Cametco did. So Cametco did in a short period of time, and when I say short, 2 or 3 years. And, so Cametco is a winning company. They've got great scientists. They're experienced in all aspects of hydrometallurgy. They have experience in electronics. They have experience in battery development. They have across-the-board experience, and they're the second largest research firm and probably one of the most respected research firms, I'd have to say, around the world. So it's not a hard decision. You stay with the winners. I like the president, who's, as far as I'm concerned, is a genius, and all of his scientists, which are just about up to where he is. So Cametco's working on our project. They're very proud of their accomplishments. They're arm's length, so when we make an announcement, it's not the company saying so. We don't have a lab, for example, in our garage that we run this stuff through. We contract that out, and we're arm's length to it. So everything that I'm putting out is justified and has a high level of proof. I'd say, is just solid. It's a solid technology. So, that's why Chemetco will remain involved. Now, on the other aspect, I've been getting questions about what's going to happen with the Rocher de Bois property. Well, I'm still waiting for the plans or the exploration budget and plans that the Australian company is developing. And once I know that, we'll make a press release on it. But that's another exciting aspect. Cobalt is really, $95,000 today. Yesterday it was $95,500. I said in a podcast a month ago that we'd see $100,000 this year per ton, and we're going to surpass that by quite a spread. So we got a lot of exciting things happening. Unfortunately, the market's not cooperating with us. Again, Bloomberg is definitely on top of all the recycling. And, I expect that we will, at some point or another, we will appear again in a feature article, because we are, as far as we can see, the leader in this, and we want to remain the leader. And even if other companies develop processes which are close or produce less, well, we have mines that have less recoveries, we have mines that have less profitability, and there's lots of them. And there's going to be room for lots. You're talking, 40, 60 million cars here by 2040. I mean, that's billions of dollars worth of cathode material.
Larry, where is American Manganese traded and under what symbols?
It's traded on the Venture Exchange under the symbol AMY, and it's traded in the U.S. under the symbol AMYZF, and it's traded in Frankfurt under the symbol 2M. We have a website at AmericanManganeseInc.com where due diligence can be done on the company. I can give you my email address, or you can contact me directly, LREAUGH@AMYMN.com, or give us a phone call, 778-574-4444.
Larry, thanks for the update.
You're welcome, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. We were speaking on March 23rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.